there becomes essentially partnership or partial ownership
Yeah.
in those scenarios.
Yeah.
And, somebody coming in and maybe wanting to have 100% and not having a license, you're going to have some hurdles that you're going to have to jump through.
It's going to be very difficult.
So I am Chip with Transworld Business Advisors, and we are doing an episode of Chip's Tips. In this case, SBA edition. Jeff Katz with Live Oak. Jeff, introduce yourself and kind of tell us how you're involved with Transworld to start with and kind of why we interact on a daily basis.
Yeah, great. Yes, again, Jeff Katz. I'm with Live Oak Bank, and I've been doing SBA lending for a little over 20 years now. Started out in the underwriting world and then moved over to originations. And we've been working. Live Oak has a really great relationship with Transworld Business Advisors, across the country. And so, we do a lot of business together and have a great relationship. So.
Cool. All right. So one of the things, you and I were talking, and I kind of want to get into more this being a buyer's edition type thing.
Yeah.
And I want to get into, as you know, I do a lot licensed trades.
Yeah.
And that kind of brings up some hurdles that we always have to get around.
Right.
And I'm going to take that into another phase later. But at this point, let's talk about cash buyers versus SBA buyers and going after licensed trades. So let's kind of do top level here first with, can a buyer buy a trade that needs a license? And actually for this discussion, why don't we go with HVAC, because that's a fairly easy one and one that we get calls on a lot.
Yeah.
If somebody wants to buy an HVAC company, they want to take out an SBA loan, what do they got to do, and what are some of the parameters that they have to consider when they're looking at listings?
Yeah. So this is something that has been a challenge, I think, for most every SBA lender, with regards to licensing. And, unfortunately, and there's really not a black and white scenario. It's kind of, it seems to just be a perpetual gray area. But I would say that a rule of thumb would be two situations. You have a buyer who, they don't have a lot of industry experience, but they really want to get into it. Maybe they have good transferable skills. But you do the research, you just kind of do a discovery with the buyer, and, they realize that it's going to take more than a year, for them to acquire the license needed to run the business.
So at that early stage, when they're looking at it and they don't have that year planned out, or how do they even, let's go this way, let's back it up. How do they get to that year? How do they operate for that year if they buy it?
So if it's going to take them more than a year to acquire the license, then that's typically, for most SBA lenders, going to be kind of a difficult situation. In that case, we would probably want the seller to retain some portion of ownership, as well as guarantee the SBA loan. So,
which most sellers aren't real comfortable with, because that license, they're signing off on those jobs for a year where there's a new buyer on board.
Right. The other alternative is to find a partner up with somebody other than the seller who has the license, the necessary license, and maybe give them a portion of ownership of the business
if they have that partner.
Right, if they have that partner.
In a scenario, so I've had a couple of small HVAC companies. So it's funny, right? You kind of have different levels of things. You have some small ones and you have some big ones.
Yeah.
The big ones are sort of easier to find solutions for, right? But a couple of the last ones were, 2-3 vans. There'd be a couple technicians, maybe an office worker. In those scenarios, you have somebody coming in and say, I want to be the owner. I don't have a license. I don't have a background.
Yeah.
The business is going for, say, $500,000 to $700,000, and that guy wants to inquire on that business with no plan for the license. And, let's say the seller doesn't want to qualify somebody for that year. What position does that put that buyer in?
Yeah, I mean that's a really difficult position. SBA may not be the best option for them.
Right. So that takes them into a cash or other options.
Right.
Right. Kind of what I want to get at is that, there's SBA guidelines or things that you guys have to work in that buyers have to understand when they're going in and looking at some of these listings of what your parameters are. And getting that license has to be part of that plan.
Yeah, it is. And the other part of what I was going to, kind of talk about and discuss was if the buyer can get the license within, less than 1 year. So typically 6 to 12 months. That's a little bit different of a situation for SBA lenders. You can have the seller qualify the business. However, the buyer has to show, they have to have a plan for, okay, what does it look like to get that license within the first 6 to 12 months? Do you have, do you have the necessary experience? Do you have the necessary number of hours that the state requires? When can you? What is the earliest you can sit for the exams? When would you expect to get the license after taking the exam? So you really have to have a game plan laid out for, okay. You really have to put some thought into it, have done some research with the state, the state regulations.
Is that something you're helping those buyers with and coming up with that plan and helping them figure that out, or that's something they're doing on their own?
That's something they're doing on their own. I mean, I can give them, kind of guidance, as I just, laid out. But it's really, the onus is really on them to kind of, based on their background, their work experience.
Yeah. I mean, that's definitely something as brokers we're helping them with.
Yeah.
But kind of the highlights I'm trying to get at is that some people don't ask you, the lender, enough questions for the listings that they're going after.
Okay.
And I really think that causes a lot of problems with things.
Yeah.
Some licenses are easy, right? I've got one right now that's a pool cleaning company.
Yeah.
So you've got a pool cleaning license, you have a pool repair license. Pool cleaning you can get simply. The repair license you can get in less than a year.
Yeah.
So you can plan that out.
Yeah.
But HVC, plumbing, electrical, some of the others, you're going to go over that time frame.
Yeah. Yeah. And that's where it becomes difficult for most SBA lenders, I believe.
Yeah. So let's go back into what you threw in before, which was, okay, yes, because everybody hears everything on the internet. Everybody has a buddy that does a deal. Let's go into I got a buddy with a license, or maybe the seller hangs on portion, right? Let's go into I'm not going to be able to get a license in that time frame. And are there avenues within the lending process that we can get there? Which, again, you already touched on them. I just kind of want to go into a little bit more. So explain those kind of two routes that you threw out earlier a little bit more. Hey, I've got a buddy with a license or an actual employee. Mm-hmm. Or, hey, if we can get the seller to hang around, kind of explain those two avenues.
Yeah. So if you have, a partner with a license, then, as I mentioned before, they can partner up with them. You can discuss, ownership percentages if they're willing to come on as an owner. They don't necessarily have to guarantee. I think that's going to be more of a case-by-case basis.
And when you mean guarantee, you mean actually on the loan?
Personally guarantee the loan. Yeah, that's going to be on a case-by-case basis for, depending on the SBA lender.
Yeah.
But, that would be the ideal situation, I think, for, somebody who has a partner lined up with them that has the license. They're going to want to have, in my opinion, the lender's going to want to have that partner have some kind of consideration and possibly skin in the game with a guarantee.
Right. So there becomes essentially partnership or partial ownership in those scenarios.
Yeah.
And, somebody coming in and maybe wanting to have 100% and not having a license, you're going to have some hurdles that you're going to have to jump through.
It's going to be very difficult. If you want to be, if you want to be 100% owner, you don't have the license, however, I think it's going to be very difficult if you cannot obtain that license within the first year. It's going to be very difficult to get financing.
And then what about the scenario to where if the seller hangs around for a little while afterwards? And when I mean a little while, I mean more than that year point that we talked about earlier, right? So
Right.
how can that scenario play out?
So if this is going to be a long-term play to get the license, and the seller is going to qualify, then in that case, I think most SBA lenders are going to want the seller to have some what we call skin in the game, and that could be
Retain some ownership.
Retain some ownership. With the SBA, they had made some changes to the rules in this past June, where if the seller is going to remain on board as an owner, if it's less than 20%, that seller is going to have to guarantee the loan for the first 2 years.
Like the deal we were looking at with the 8119.
Yeah, exactly.
Same scenario.
It's same scenario. So this, that I think that might be, that could be a difficult sell.
Right, because that is, again, to where the seller is going to be signing paperwork.
Right.
And now the seller is going to be tied to the buyer, and essentially two people that just don't know each other.
Yeah.
So, these stories that people hear, yes, things can be done. They can be done with a big butt and a few.
Right.
That's sketchy, right?
Yeah.
But if you throw yourself on the other side of the table as a seller, you really want to put yourself on a note for a buyer that you don't know, and you're personal guaranteed for that for the life of the loan.
Right.
And now you're a subordinate, essentially.
Yeah.
And you're not the 100% owner controlling the ship.
Right.
Yeah,
but you're still on the hook for the loan.
Right. But from a buyer standpoint, we were able to make the deal happen, and you never know.
Yeah.
Like, we're just trying to bring buyers and sellers together for deals that kind of work.
Yeah.
And when people are on the same page, we're in good shape. When they're not, maybe we're not in the right scenario.
Right. And I think, this is just my perspective. It might work for some sellers. It might not work for other sellers. I think it really depends on, what's going on in the seller's life. Maybe they're in a situation where, they really want to sell or need to sell the business. Maybe that would force their hand to say, you know what, I will guarantee for two,
Right. Like the other deal you and I were talking about, there was a health situation.
Right. It could be a health situation.
And it was a scenario to where this works.
Yeah.
I like this person. I picked this buyer. Let's try to make this happen.
Yeah.
But on the flip of that, when you just have somebody inquiring on a listing off of Biz by Sell,
right,
and they're looking for an HVAC company, they have no license, they have no connection to the seller, them taking out an SBA loan in that scenario without the background, if you're not a cash buyer, you're kind of swimming up.
It's going to be challenging for most SBA lenders, I think, for that situation.
I like your term of challenging. I'd rather nip that.
Very challenging.
Exactly right. But it's tough.
Yeah.
Because I look into this, so I'm a business broker because I looked into buying my own business one day. And I kind of went down the same road as well, right? I got into some that I just couldn't do. And I wouldn't say I couldn't wrap my head around it. Yeah. But I wanted to find a way to make it work. I wanted to figure out the puzzle. And there was just a couple of scenarios that it didn't matter how many times I turned the Rubik's Cube, I couldn't solve the puzzle because I didn't have enough pieces to make that work. Yeah. And I always struggle trying to help buyers, understand that, hey, this isn't going to work. Yeah. And, I'm not trying to be rude, but no, this isn't the one for you. Yeah. Or, there are groups that can do what you're trying to do, which is what I want to get into the next part of this, which is if you're a private equity group or a bigger, larger group, you may have access to a license and you may be able to take care of that part. So let's go into the licensing question with not necessarily, just an individual trying to buy that
Yeah.
that $500,000 HVAC company, but now we've got a private equity group,
Right.
and they're going to purchase that. Let's just keep it at the same $500,000 to $700,000 HVAC, even though we know they look bigger than that.
Yeah.
But that equity group or that investment group, let's say they don't have a license as well, right? How do they work through that scenario?
So it's interesting. I don't have a lot of background or intel, I guess, on this scenario, because I typically don't work a lot with private equity groups. With the SBA loans, they are recourse loans. So private equity groups tend not to, they tend to do their own financing. They steer away from SBA because of the personal guarantee requirement.
Sure.
So, so I have not worked with many private equity groups.
Yeah, we don't have to pin, and this is kind of what I was getting at, right? We don't have to pin this on an SBA, but everybody sort of kind of pins all these loans in SBA loans.
Yeah.
But at the end of the day, they may be going after a different type of loan.
Yeah.
Again, therefore, different set of rules.
Right. Well, and private equity, they have their own, they get their own funding. So they're not subject to the SBA's rules regarding the licensing.
But sometimes they're still taking out loans, though, like everybody else, and trying to save, not spend cash if they don't have to.
Yeah.
And I kind of mean that more probably with investment groups more than equity. There's a lot of family investment groups now.
Yeah.
There's a lot of smaller ones.
Yeah.
Those are the kind of the ones that I was thinking of with this.
Yeah, I mean, if they're using other financing alternatives, then I'm going to venture to guess they're not subject to the SBA requirements surrounding the licensing.
Yeah.
So there's probably, with those other means of funding, there's probably going to be less restrictions.
Right, which is somebody might have heard a story that somebody got an SBA loan.
Right.
But at the end of the day, they may have used an SBA lender, but that loan may not have been an SBA loan.
Right.
So, like if a buyer comes to you, how many different loan types do you guys have access to?
So, we're our primary product for Live Oak Bank is the SBA 7A loan
right.
for business acquisitions. But outside of that, we don't. These types of transactions where you have, there's a lot of goodwill. Yeah. It's really a cash flow.
It is your bread and butter.
That's the bread and butter is a cash flow stream.
Yeah.
Those unsecured or goodwill loans have to go through the SBA 7A program.
Right, but
because of the guarantee.
But if somebody goes over, and what I'm trying to help you with here is that we go over that $5 million mark.
Yeah.
You guys are adding what onto that?
As far as
say it's a $6 million business.
Okay.
And SBA only goes up to 5, right? You guys are able to add on additionals.
Yeah. So we do have a pari passu. I call it a combo loan program, where we're able to utilize the SBA program coupled with a conventional loan. So we can actually lend up to $9 million on a business acquisition.
That's pretty cool.
Yeah.
So you do have access to more than just SBA, but that is the main what you guys are trying to do.
Yeah, that's what we're trying to do. But that combo loan program I just referenced, that's still subject to the SBA guidelines.
Okay.
Yeah.
And somebody doing a combo on that, like, can that additional funds be for just business, or can that be for property as well?
It could be for a number of things with the acquisition. Obviously the acquisition itself. If there's related commercial real estate, we could look at financing that. Mm-hmm. We will I would say most all SBA lenders would include working capital in an acquisition loan, because the last thing you want to happen is you acquire the business and then you're 1 month in, and then you're facing a working capital crunch, a credit crunch. So we want to make sure you're well capitalized going in. So we can include working capital, and then we can also include the closing costs as well.
Right.
So
let's go back to kind of the individual buyer scenarios.
Yeah.
And let's get into down payments and
Sure.
working capital and things like that. Actually, is something that kind of made me think a little bit here. Everybody sees the 10% down for a loan. As a business broker, I throw out, listen, 20% is really the number that you need to acquire a business from a upfront cash required standpoint. 10 of that being the actual loan fees and the loan down payment. But help somebody out kind of, and I'll get into my portion with why I throw out more after, but what's somebody going to need down payment wise? What's that covering? And then how does that loan kind of build up towards the end, and how much are they really taking out?
Yeah.
Let's go back to the $750,000, HVAC company.
Yeah.
How's that going to look for that loan? Are they taking out a $750,000 loan even though they're putting 10% down? How's that whole scenario work out? Because you're throwing working capital in, right? So now we're adding more to the loan, but they're dropping money in on the upfront fees?
Yeah. So the way it works is we can finance. So the SBA has a minimum down payment requirement for all SBA lenders.
Yeah.
That's 10%.
Correct.
Some lenders require 15, some require 20. At Live Oak Bank, we typically go with the 10% down. So we can finance 90% of the total project costs. So what are the total project costs? It's the acquisition purchase price, it's the working capital amount, the closing costs. So you add all those project costs up. Let's say the purchase price is $750, but with working capital and closing costs, maybe you're at $850 or $900
right
for the total project costs. Yeah. So we'll look at, if the cash flow of the business can support the loan, we'll look at financing 90% of the total project costs. So you're coming in with 10% of the total project costs. So we started at $750 for the acquisition, built-in working capital, closing costs. Let's say we're at $900,000 for the total project cost. The 10% down is going to be $90,000 of that $900,000 total project.
Yeah, so that number is increased.
So already. It is increased. Yeah.
And I don't mean that in a bad way, right? Yeah. So, and I tell people this, I'm like, listen, you have to understand that you've got more than the 10% for taking out the loan. And I don't mean more by that much more. But, you've got our side of things too, where you go telling somebody that, hey, listen, you gotta have your insurance in place, right? You gotta have your insurance bound before we close.
Yeah.
There's going to be maybe there's landlord issues involved. There's going to be some other stuff. Heck, even the down payment just to put into escrow for the deal itself.
Yeah.
So there's a lot of upfront costs that people don't realize, that they're like, hey, maybe I got $75,000. I can go buy that $750,000 business.
Right.
Well, the reality is, by the time you figure all that out, you could be easily double that number.
Yeah.
So I don't want to scare people sometimes with that down payment or what they need up front, but it's not the 10% just for the loan. It is 10% for the loan, but that 10% is a little higher when you go ahead factoring everything in. And then to actually do a deal, man, you need to be overcapitalized on all these deals.
Yeah. Another factor that comes into play with the down, the 10, 20% is SBA lenders in general, they don't want you to put in every last dime for the down payment and then have nothing left over for what we call post-closing liquidity, personal liquidity. So
you can't be wiped out.
You can't be wiped out. You have to have a cushion, a personal cushion.
Right. And people don't realize that sometimes I need that in an account after the deal is over, waiting.
Right.
And if you guys don't see that in an account, we're not closing.
Right. And I wish I can put a dollar amount on what Live Oak looks for or what other lenders look for, but it's really it's kind of a scale, because it really depends on what's your personal debt load, how much debt do you have personally, and also the size of the business that you're acquiring. We're going to look for a lot more post-closing liquidity on a $3 million acquisition versus a $300,000 acquisition, right?
Would that number be affected? Like, again, we're kind of talking construction industry stuff, right?
Yeah.
So we deal with work in progress quite a bit.
Right.
So back to that working capital number, right? So would it vary based on industry like that? Like if somebody's buying a restaurant, which has no real working,
Right.
there's no work in progress, versus, hey, I might have a window installer that they're buying windows this year and installing them next year.
Yeah.
And they might not be getting paid for another 60, 70 days after they're installed. So
Yeah.
we could have money tied up for a real long period of time in some scenarios.
So that is going to be that really doesn't play into post-closing liquidity as much as it would the business operating capital that we would build into the loan.
Sure. Okay.
We would do it.
I didn't know if maybe it was a little of both.
It yes and no. I personally compartmentalize those.
Yeah.
As far as like construction and what the cash cycle analysis is on the company, that's going to play more into how much operating capital do they need.
I got you.
Yeah.
Yeah. So there's I guess you'd say in this scenario, there's really three factors that people need to consider. You've got your down payment money, right? You've got your money to actually close the deal, and then you have your post-closing liquidity.
Yeah.
And sometimes people only consider that first little piece.
Yeah.
I've got $75,000. I'm going to go buy that $750,000 business.
No.
So at the end of the day, sometimes even the 20% that I'm telling people still isn't even enough.
Yeah. Right.
And when you tell people 30%, they lose their mind sometimes.
Yeah.
And I'm not one that wants to crush people's dreams. Just because mine were crushed at one point. Thanks, Mike Shea. But no, right? So it's the more we know, the better prepared we can be, and the more we're just not surprised. I just wish that more people did know the whole scenario or what they need to do a deal, which is why I think our world is kind of not as upfront and open as other industries. And people may know about the businesses, but again, if they have to work with a lender, there's scenarios that you have to work through to be able to make these things happen.
Yeah. And I try to, on an intro call, the very first call with a prospect, I'm very transparent. I'm not a huge fan of the element of surprise. So we talk about these things. We talk about the personal guarantee, the fact that SBA may require them to pledge, personal property as collateral. We talk about, where's your down payment coming from? How much you're going to have left over? I try to dig into those on that very first call, so we can set the expectation, with the buyer and the seller and you as the broker. That way we know up front out of the gate, what we're working with. But, it's really important.
But even some buyers, right? The buyers really know sometimes what they're even looking for. I mean, I can't tell you how many people call me and they're like, yeah, I'm agnostic. I just want something that cash flows. Me and my wife are going to, be involved in it or not, right? Yeah. So I think sometimes they do those initial calls with you guys and they have the generic conversation.
Yeah.
And then as they start doing the search, they don't go back and talk to you again.
Right.
And say, hey, listen, I'm going after construction because, man, the margins are awesome.
Right.
Or, this is really kind of where I want to be. And then all of a sudden it's skewed, right? We're out of whack.
Yeah. Yeah. I mean, that's a great point. They could be coming from a retail background and, they finally isolate their search. Like you said, I want to do construction. We need to have from a lender to buyer perspective, we need to have a conversation about that.
Right. Let's take that scenario. So let's say somebody's coming out of retail, right? And then they want to go into a construction trade. Are you guys, I don't want to say aren't you going to give somebody a loan in that scenario? But, what does somebody have to do to be able to jump that gap, right? To get you guys on board with, hey, I can do this, or I can make this jump from my industry over to this other industry.
Yeah. From a general perspective, I think for SBA lenders in general, I think it's going to be very difficult to obtain SBA financing in in the construction industry if you don't have at least some transferable skills.
So you're saying there are gaps that are too far to jump.
There are gaps that are very far to jump.
Yeah, and again, so everything's case by case with us, right? But again, I try to tell people, hey, listen, go back to your lender, and your lender is going to tell you whether that gap is too much or not.
Yeah.
And there's one more with that. So speaking along to the gap, right? And I've had this conversation with people recently because everybody's looking for an absentee ownership.
Yeah.
Everybody's like, the last guy I talked to, he's in Michigan or I think it was Michigan. And he was looking down here in Florida for a cash flowing business. And he was going to take out an SBA loan. And I'm like, hey, man, have you talked to your lender about you living in Michigan and owning a business down here in Florida? Like, talk to me about the distance gap in scenarios like that.
So I think that's a relocation, absentee ownership is very difficult.
This guy was not going to move.
Okay, so not going to
move. They were going to stay in Michigan. Him and his wife were going to absentee run it, maybe fly down a couple of times. And they wanted to buy something in Central Florida.
So was the business the type of business where the seller was on the ground going into an office every day or in the market, or was it like a business that was run remotely and the seller just happened to live here in Florida?
This was an actual retail type location.
Okay. Yeah. So in that particular situation, I think you're going to be very hard pressed to find a lender who's comfortable financing that if you're not relocating.
So if you're not, you're not looking for somebody to become owner operators necessarily, but you need somebody to be nearby and involved in the business. Is that an accurate statement?
Yeah. I mean, and ideally they should be owner operator. I mean, SBA discourages absentee run businesses, absentee ownership.
Yeah.
So ideally they should be involved in the business in some capacity.
Right.